Bitcoin has seen a strong rally to 24,300, retesting the monthly 50 EMA. Was this rally the start of the bull market? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're having a fantastic day. What a crazy 24 hours for Bitcoin, guys. Bitcoin saw a massive 12% rally all the way up from that 21,500 support to 24,300. However, there are still two major points of resistance Bitcoin does need to break above to send the charts into a macro uptrend. That being the 50 EMA on the monthly and the 200 moving average on the weekly. These two moving averages correspond with 24,300, where Bitcoin is currently retesting, and of course 25,000. In today's video, we're going to be discussing this in a lot more detail, as well as taking on the short term, the broader markets, the traditional markets, and of course the bull market going forward. Let's go ahead and jump in, guys. Now do smash that like button, hit the comment button, obviously subscribe to the channel. We do daily videos for Bitcoin, technical analysis, price action analysis, and so much more, guys. You can also join our Telegram channel. That will be the second link down below. You'll get updates on news events, charts, videos, information, educational posts. Everything you need is in this channel. Of course, all of our videos are also posted in here. You can go ahead and get access to our VIP channel, guys, with all of our group members in here, over 514 VIP members. You'll get access to all of our shorts, all of our longs, all of our altcoin trades, etc., etc. Everything comes with exact targets, exact take profits, exact stop losses, such as this amazing long we did on Bitcoin just before that rally last night. You also get access to our group chat if you are interested. Again, all information for that can be found within the free channel. Go ahead and click the information over here. And finally, guys, if you are interested in supporting the channel further, sign up to Bitget, link down below. You get access to up to 15% off all of your trading fees for the entire time you're trading there if you are under my link. Let's get into the video. So starting off with market data. Currently, Bitcoin is up 6.7% for February. How quickly did that turn around, guys? We were down 6% yesterday. We were up 6% today. It turned around within a blink of an eye. Absolutely insane. And I was talking to a couple of my members actually earlier today. And one of the main reasons why we think it turned around was, in fact, this news event got released over here. And this was allowing Americans again to invest in crypto with their 401k, I'm pretty sure. So you can go ahead and click that article to read out more, but that's one of the reasons why crypto saw such a volatile move upwards. Anyway, 6.77% for up for February. Volume is up 34%, over 100 billion. Liquidations up 160%. Volatility has spiked up to 2.76. Again, these liquidations are brutal, guys. Look at all these shorts being absolutely demolished on that rally up. A massive short squeeze, pushing everyone in the market and setting that price higher. Thankfully, we took that long before we got a nice profit on Bitcoin. Let's go ahead and look at the broader market. So DXY has come down and actually retested this downward trending resistance. So a potential support resistance flip in play, or a potential fake out. Again, if we do bounce up over here, if we are able to hold above this resistance support zone, we will send higher for the DXY, and again, the market will retrace. If we do break below here, this could be the trigger that will indicate, or at least tell us, that Bitcoin could break that 25k mark and our traditional markets can push higher. Looking at the traditional markets, the Dow Jones is still in that symmetrical triangle formation. It is retested that downward sloping resistance yesterday. It has come back down to the middle of that symmetrical triangle formation, and it is currently pushing toward the upside. We are currently green on the current candle. Again, we did say we're looking for a breakout nearing the end of Feb, either a break upwards or a break downwards. We are coming closer to that apex point, and again, we generally break out within that last 70% range of our apexes for our patterns. So again, a daily candle above this resistance will continue the price action to 35,000, potentially 36,600. A daily close below the support, we're going to 33, we're going to 32. Definitely keep an eye on that. With the DXY at support now, and the S&P 500 and Dow Jones now at resistance, there is a chance we could run into some resistance here in the broader markets as well as Bitcoin. Going back to the S&P 500, you can see we're still underneath that major resistance zone, that resistance zone being 4,170 to 4,200. Breaking through that level level will send the S&P 500 upward for the next couple days, potentially 4,300 to 4,287. Again, guys, no need to explain it. If the S&P 500 goes up, Dow Jones goes up, DXY goes down, we're more likely to see Bitcoin rally past 25k. And 25k is a very important level. The bond yields have been on a rampage, breaking 4.6%. Again, major trigger for a continuation. This is also a major ejection point. If the bond yields fail to get above this level and fail to hold above this level, we could see a pullback here, guys, for the DXY, and again, see some more relief in the markets and more continuations upwards. So let's go ahead and talk about Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And we're going to be discussing a few things today, guys, starting with, of course, the short-term price action, the macro, the technicals, the current resistance levels and triggers, and more importantly, that bull market. When does it start and what we're looking like right now in the macro? So currently, Bitcoin has seen quite an explosive rally to the upside. There's absolutely no doubt about that. We went from negative 6% to positive 6% in just 24 hours, a 12% rally in the markets following that bullish news by the American government. However, guys, Bitcoin is still sitting underneath 25,000, which is that trigger for the next move up. As you can see on the VRPV here, the distance between 25,000 and 28,000 is basically thinned out, meaning there is very little historical trading resistance or trading orders that have been placed between this range, indicating this in fact is an incredibly low resistance range. When we have positive momentum on the larger time frame, we have that momentum and we have that volume, we can push through low resistance ranges quite easy. So a break above 25k could potentially result in a continuation upward, or should I say will most likely result in a continuation upwards to 28 to 30,000. Going back to the VRPV, guys, we can see over here on the right hand side of the screen, the VRPV is incredibly thinned out. So again, that does represent we've had very little historical trading resistance within that range, meaning it is a lower resistance range. If you don't know what the VRPV means, go ahead and watch some of my older videos. I go over it in a lot more detail. So what is the significance of 25k besides a horizontal resistance and of course a volume resistance? 25k actually corresponds with the 200 moving average on the weekly chart, as well as the lower resistance on the Gaussian channel, again on the weekly chart. And 24,300, the current level we're currently sitting above, corresponds with the 50 EMA on the monthly chart. These 3 particular levels are incredibly important when it comes to predicting overall macro trends. We'll start with the 50 EMA. Currently on the daily, on the smaller time frame, we are sitting around 24,700. So we are technically above the 24,300 50 EMA on Bitcoin's chart. This 50 EMA we have seen as resistance a few other times in Bitcoin's history, but not much. We've seen mainly a support around the bottom and again around the bottom in 2018. In 2018, we saw Bitcoin drop below the 50 EMA, and once we broke a monthly candle above the 50 EMA, we never actually dropped back below it for a monthly candle. We indicated a shift in the macro trend, and again, since there's a 50 EMA and not 200, it's going to indicate a potential macro reversal and a shift in the macro trend earlier than what you would see on the 200, so it's more of a leading indicator. But when you have a 50 EMA and 200 moving average cross, it is more confidence, it's a stronger signal that a trend is reversed, and that is what we're currently seeing. So a monthly candle, which will end in 12 days above the 50 EMA, is going to signify that the bottom has been in and the macro uptrend has begun. This macro uptrend will potentially lead to a bull market. We'll talk about that in a second. So that is our first point of resistance and our first major trigger, which we are currently retesting. The second one being the 200 moving average on the weekly chart, represented by that yellow line. Again, it is a slower moving average that's going to indicate that trend shift later, but when it does indicate the trend shift, it is usually more certain. Again, this is sitting at that $25,000 resistance, which is why 25K is such a strong point of resistance and a significant trigger for a continuation upwards. So guys, there you have it. We need to break above those two levels to see any sort of continuation upwards. Let's talk about the bull market. So when will the bull market start? Let's play devil's advocate. Let's say we break above, well, let's play a favorable scenario, should I say. Let's say we break above those resistances. When will the bull market start? Will that be enough to kick off the bull market? The simple answer is no, it's really not. What we're looking for a bull market to start, we're looking for a monthly candle close above the baseline of the Ichimoku cloud. There's a red line you can see that goes zigzaggy across the price action, something like that. You can see it over here. We're looking for a monthly candle above the baseline to kick off the bull market. Now remember, the bull market doesn't last forever. The bull market is a set period of months that is very, very strong upward price action. It doesn't mean we can't see upward price action into the bull market. We will see upward price action. We will see an uptrend before we enter a bull market. As you can see in prior cycles, we saw a 192% rally and we saw a 213% rally before we even technically entered the bull market. Because for a bull market to start, we need to see an uptrend, as a bull market is an aggressive uptrend. So to enter an aggressive uptrend, we need to be in an uptrend for long enough for that momentum to continue. So the uptrend will start above 25K. When will the uptrend start to really gain strength? That is going to be above that yearly bull market low, the $30,000 level. You can see on prior cycles, when we close a monthly candle above 30,000, we end up never closing a monthly candle back below it, and that generally shoots us up into a bull market, or at least builds the stepping stones to develop that bull market rally eventually. Now, that is why we're looking at this chart, because we can see on that VRPV gap, the next major level of resistance is, by no coincidence, that exact level we need to break above on the monthly chart to trigger a bull market. So if we break above 25K, this is going to be our next target. Our next target is $28,000 to $30,000. So now that we've explained the macro to the upside, let's talk about the downside, guys. If we do reject from 25K, where are our targets? We have to go back to our shorter time frame. Let's go back to our small time frame and discuss our prior supports, because our resistances that were resistances are now supports. So we obviously have a 25K resistance, okay? The 25K resistance is over here. We obviously have a 24.3K resistance, which is over here. So now 24.3K is going to be support. We're looking for whole numbers. We're looking for 24,000, okay? Psychological. We're looking for 22,800. We're looking for 22,000. We're also then looking back at our prior levels, 21,300, 20,800, and 19,200 as lower levels if we do aggressively reject from here. Again, guys, if the S&P 500 and Dow Jones do reject and the DXY bounces and continue upwards, that is a possibility. However, the likelihood that we do is very, very small. Like I said already, guys, if you've been watching the channel for a while, we've said this the entire time. We found decreasing momentum, volatility, and volume in this resistance range. We said we're likely to see a pullback. Our first target was 21,500, which was this local high. We said at that point, what we said prior, we're very unlikely to see a new low. In fact, we expect this pullback to just be a healthy correction. It happened into 21,500, which saw a massive rally. I find it very hard to believe. I find it unlikely that we're going to see a strong rejection from this point, which will lead to new lows. Now, the trigger for a continuation downward, we're talking back to these lower targets, 20,000, 19,000, will only trigger below 21,500, as 21,500 is still the trigger for a continuation downward, okay? The continuation upward is 25,000, the continuation downwards is 21,500. These horizontal levels do not change often. They very much stay relative across all time frames. Those are the triggers. We're currently bouncing between those levels. Again, as we approach this upper side, we are much more bullish. This is resistance and much more bearish below, okay? So we're in a much more bullish territory. Moving on from there, guys, let's take a look at the macro in terms of our technicals. Then we'll go back to the short term and then finish back up on the very large time frame. So let's take a look at some of our momentum indicators over here, guys. MACD, some of our classic ones, RSI, and market cipher B. Let's take a look at some of these. So, and we'll actually really quickly, I want to talk about the market cipher A, because I had a question about the market cipher A. One of our members asked, what is a market cipher A and how to use it? Because I do use it in every single video. A lot of you guys are probably wondering, what the hell is this weird indicator on MegaWhale's screen that it uses pretty much every single day? So the market cipher A, it really isn't complicated, guys. I'll move some of these out of the way. The market cipher A is simply a combination of a variety of different EMAs. You can see over here, there's 8 different EMAs. My settings are 4, 15, 17, 22, 26, 28, 32, and 50. Those are my EMA settings. Generally, what the market cipher tells you, it tells you 2 things: volatility and strength of trend. When the price action is massively above the 50 EMA, it tells you we're in a strong uptrend. When the price action is massively above, again, the 50 EMA, it tells you there's volatility. So if you start to see a drop from the 50 EMA downwards, it tells you increasing strength in trend as well as increasing volatility. As you start to see the price action get closer to the 50 EMA, it signals a decrease in volatility and of course a decrease in the strength of the trend. Generally, you can trade these pinch points where the price action and a smaller time frame average pushes past the 50 EMA because it signifies a shift in the overall trend. That is generally how we use a 50 EMA. It's used as support, but more importantly, it's used to gauge the overall strength of the trend and points of which the trend is weakening and compressing. So on the daily chart, guys, we can see over here, the MACD is crossing over. It is crossing into bullish territory. The RSI is pushing oversold. And of course, the market cipher B is printed a green dot indicating positive momentum. Again, this is very expected from lagging indicators after we've seen such an explosive rally. If we move to a 3-day chart, I assume we're going to start to see the same thing. Yes, we're starting to see green dots, green volume bars printing here in MACD indicating a surge in momentum. We're seeing red dots printing here, still decreasing momentum over here. Again, this is positive momentum, but the positive momentum is still weakening, and the RSI again has not created a high, so that is something of concern. Again, all this is expected as we approach major resistance. Moving on to a 7-day chart over here, guys, we can see the momentum on the market cipher B has actually just flipped positive on the macro. The RSI has made a new high, so continue upwards, and the MACD has printed a green candle, which again signifies momentum is stronger than the last period, potentially leading to a continuation. Here is the thing, guys. While we're at macro resistance, it's very important to refer to structures and short-term analytics rather than our macro levels, okay? Our macro indicators are really good to predict continuations out of resistances, but when we have reached resistance, they're incredibly poor at predicting reversal points, as by the time we reach a major resistance, it would have meant we've continued upwards for some amount of time to reach that resistance. And if the indicators are lagging, they're going to be over bullish, or should I say, they're going to be overcompensating that bullish argument rather than looking at the rejection point, okay? So if we're looking for reversals, you do not look for on the larger time frames. You have to look at smaller time frames. So let's do that now. Let's start on a really small time frame, guys. We're doing a 5-minute chart as the price action is only coming up. So the uptrend is still intact on the 5-minute chart. The uptrend is very much still intact. We're above the 50 EMA. We're above the Gaussian channel. This uptrend is still intact. We have our 25K resistance here, which we haven't really retested. We retested about 29K. And of course, we are starting to see some divergences pop up. We're seeing weakness in this momentum. And again, that weakness in momentum is going to, or should be popping up on slightly higher time frames. We see it again on the 15-minute chart. It might be popping up on the 30-minute chart. We are seeing it on the 30-minute chart. So we are starting to see weakness at resistance. While we're at resistance, resistance needs to be taken Literally, it is literally resistance, and therefore you have to be cautious longing at resistance. It doesn't matter how strong the resistance is, it doesn't matter how significant it is. After we've seen massive rallies up, resistances are always the best place to be looking for shorts, as it has a greater probability that you will be successful in shorting than if it just continues upwards and you go into a long. So right now, guys, I would be looking for shorts personally. I'd be having my stop loss slightly above 25K, and I'd be definitely looking to load up continuations downwards. If we start to lose the 50 EMA and that Gaussian channel would result in a continuation toward the downside. How aggressive that downside continuation can go, again, we talked about our support levels. We are looking for 24,300, 24,000, 23,000, and then these lower support levels that we've indicated before, okay? Look for these psychological support levels, these big round numbers. We generally find support within and around those levels, okay? Not exactly, but within and around those levels. So that is what we're looking for short term. I think for the short term, we are likely to reject. I think for any sort of continuation upwards, we do need to see those levels break, which we talked about in the video prior. I'm going to go ahead and end the video there, guys. I think I covered everything. If you've got any questions, leave them down below. Again, there's a lot to talk about. The markets have rallied a lot. I think the main takeaway from this video, guys, is number one, don't look too much at 3-day, 1-day, weekly momentum right now. That stuff is going to be very, very bullish. Look at the short term. Obviously, you should be in longs right now. You should have already had longs. You can be taking profits at long on your longs now at resistance. Your spot bags, you can remain in because, again, we did expect that correction to be healthy. Where we get worried is if the price drops below 21,500. If we drop below 21,500, that is when the bearish argument on the macro kicks in a lot again. That's very, very bad. Until then, the macro is still looking really good. The macro looks great. Okay, it looks like we're going up. We break over 50 EMA, great. We break over 200 EMA, great. Uptrends kicking, uptrends in full gear. However, guys, on the smaller time frame, we are at resistance. Be a little bit more cautious here if you are scalp trading. Potentially look for some shorts. We talked about those trigger points and those potential points that would I guess, facilitate a continuation downwards. We're looking for losses of that 50 EMA. We're looking for losses of that Gaussian channel on the smaller time frames. We haven't quite got that yet. Again, these are really good indications that the price will continue downwards for a little bit. Again, healthy corrections unless proven otherwise. Go ahead and sign up to the Crypto Academy. If you do want to learn how to trade, if you want to learn how to analyze, go ahead, 10-unit course. You can find all the information by contacting us via email. We'll reply off all the information, technical analysis, market structures, strategies, trading, risk analysis, risk assessment, risk management, market psychology, you name it, all in there. Go ahead and contact us. That being said, I'll see you guys tomorrow. Cheers.